I want to talk about the best places to invest in 2020. Best city, best state in the United States, in the world to invest in real estate investing. Hey, if you're new to the channel, welcome in. My name is Clayton Morris, longtime real estate investor. I've done thousands of deals and we've analyzed markets for many, many years. And as markets shift and the data shifts, we move with it. You can't be afraid to be malleable, pliable, flexible when it comes to real estate investing. So you cannot fall in love with real estate. You cannot fall in love with certain areas if the data starts to shift. For instance, let me give you an example, right? A few years ago, people were starting to really fall in love with Orlando, Florida. I even still see some articles that talk about Orlando, Florida. Guess what? Orlando, Florida is not a good place to invest in real estate right now. Why? Tourism has just been crushed during this pandemic that we're dealing with. House prices are overinflated. Rents have dropped. So you have a number of different data points that show that investing in Orlando is not a smart move. Yet I still see people talking about Orlando. And so what happens is people get old data, they don't pay attention to the current trends. We had Neil Bawa on the show just recently where we were discussing how can you make your investments recession proof. In fact, pandemic proof. And one of the cities we talked about was Orlando. So things change. I love Orlando. I used to live there a number of years ago, but that's not a place that I would currently invest. So tonight we're going to talk about the best places to invest in real estate. And we're going to talk more broadly at first about the state itself, and then we're going to go to city level and show you some actual behind the scenes of some properties. We're going to show you some data and metrics as to why this is a powerful place to invest and one of our favorite places where we are currently building a lot of properties. Now let's talk about some of the macro data that we want to be looking at when we're investing in real estate, okay? These things are not pandemic related. These should be at the core of what you look at when you're investing in real estate. One of the main things that you want to look at is cash flow potential, right? After all, you're investing for cash flow. And what are the things that eat away at your cash flow? Well, some of the things that eat away at your cash flow are a lot of vacancies, right? When you have high vacancies, people get allured by the idea of a cheap property, or they get allured by the idea that they can pick up something cheaply and then also renovate it quickly, and they think they can get a tenant in there and they won't have a lot of vacancies, right? So they go for some of those shadier areas that on paper look really good, look really attractive. But the problem is that if you have a higher vacancy rate in a particular area, that means you're going to have more tenant turnover and you're going to have tenants that are going to constantly be leaving. And what does that do? The biggest cost that we have as real estate investors is tenant turnovers. So you get a property that you think is going to cash flow nicely. You're looking at the return on investment, the ROI on paper, and you think, yeah, that looks great on paper. And you get super excited about it, right? You find some deal on the internet somewhere, on Zillow or someplace, and you think, man, this thing has been sitting on the market for 400 days. This has got to be a deal. I mean, I get emails from people all the time. They'll send me an email with a link to a property, and they're like, do you think this is a good deal? And I'm like, it's been sitting there for 400 days on the market for a reason. It needs a ton of work, and there's a reason that it's been sitting there. Otherwise, another investor would have snapped it up. So vacancy rate is very, very important. So the main metrics that we want to look at are vacancy rate. Because if a tenant is constantly leaving a property, then I'm going to have to keep going in, putting in new carpet, updating the paint. If the tenant damaged the property, I'm going to have to fix drywall. I'm going to have to do all sorts of updates. Not to mention, okay, that's just the fix-up that you might have to deal with if it's beyond the security deposit. You might also then realize that you're not getting the cash flow. So every time that place is now vacant, you're not getting the cash flow. So I want to be looking at markets in this country where the vacancy rate is low, consistently low. So that's one of our key metrics. Another key metric we want to be looking at is employment and are jobs coming to this particular area. So we'll get to why the area that I'm talking about today is so attractive, because we want to see job growth, not job decline. For instance, the Michigan market. I used to be very bullish, and I still own properties in the Detroit metro area, and there still are some great areas there, and we see some jobs coming there, and Ford are building additional things there, and GM as well. but there's also job decline. And, as an investor, I don't want to go more into that particular market until maybe that market can turn itself around. It's still good, but I'm seeing that job decline. That's one of my indicators that had me pull back. Now, I still own properties in that area, and there are some nice pockets in Redford and other areas, which are consistent cash flow for us. We just had a tenant turnover, and the tenant lived there for 3 years, and we just got a new tenant in the property, so good. New tenant moving into that property, good. However, I'm seeing job decline. That could lead to the next and third category, which is high crime. You have job declines, higher vacancy rates, and then crime starts to go up. And so those are some of the things that I get concerned about with, and it's this data, folks, is tried, true, and tested for decades. Job decline, crime goes up. It's just what happens. And then what I have to worry about is declining rents, because then that neighborhood is less favorable to rent. And the neighborhood changes, you get broken windows, break-ins, families don't want to live in these areas, school district numbers start to decline. And so all of these things kind of work in tandem once you have this. So you have more jobs, less crime, lower tenant turnover, because people want to stay in these particular areas for longer. I also want to look at school districts. Where we're building all of our properties right now, the school districts are sought after. Very good. So parents, young couples who have a son or daughter and they want to move into a 3-bedroom duplex on one side or a single family 3-bedroom property, they want to be in this particular area because the school district is good. That is incredibly favorable for me as a real estate investor. And tenants tend to stay longer in that environment, because they want to finish out a school year. They don't want to be taking their kids from spot to spot. So I like to be in areas where I want people to put down roots. Again, it comes back to tenant turnovers. And can I have these tenants stay in these particular properties for many, many years, signing 5-year leases, 3-year leases, and continuing to watch their children grow up in that same school district? I also want to see companies moving to this particular market. When I talk about wages increasing, I want to see wages increasing and jobs increasing and employment. And so one of the reasons that the state that I'm going to talk about tonight is so favorable, and there are a couple of states where we invest, but this is a prime one, is because of the number of Fortune 500 companies that are moving there. And again, we'll go into some of the data and the reasons why. So job growth, lower crime, good school districts, lower vacancy rates, all of those things combining to make this a really favorable area to invest. And then if we layer on the current pandemic on top of this, this is the new normal for us, folks. We have to start thinking about this pandemic as not something that's just an anomaly. This could very well happen again. And now when you have governments that are very eager to want to close borders, close down, shut down tourism, get people off beaches. We just saw a news story today that California is considering closing all beaches now because people couldn't get off the beach for some reason. They just didn't understand that this is a bad idea to congregate like that. So now California going to close beaches. What does that do? That crushes tourism. So we want to be looking at these metrics as it relates to our rental markets. Are you in areas that could be destroyed by tourism markets collapsing? Vegas, casino industry wiped out, shut down, and all of those industries that are related to the casino trade also crushed as a result of this. 80% that I reported this morning or yesterday, 80% of American hotels are vacant, totally vacant. So the hotel and tourism industry has just been slaughtered. And so when we look at Florida, when we look at Miami, we look at Tampa, we look at Orlando, these big tourism spots, Vegas, and other spots like that, would you want to put your eggs in that basket? So it's like, fool me once, right? Shame on me. Fool me twice. Or what is it? What did George W. Bush say? Fool me once, shame on you. Fool me twice. Well, I won't get fooled again. That was one of my favorite sound bites of his of all time. But it's true. So do you think that this could ever happen again? What we're going through right now? I mean, it was predicted a number of years ago, and it only took a few short years for this to become a reality. We've now seen what? SARS, bird flu, Ebola outbreaks, now this. And so if you want to put your eggs into a tourism basket, that's, I also think, a problem. So that's an extra icing layer on the cake. It might be smart for like a short-term rental play, but not for me as a long-term rental investor. If you're in the Airbnb game and you have a stomach for that, okay. But right now we're seeing a massive shift in Airbnb strategy as well. And the news overnight about Airbnb now, you cannot, like, they're going to make it mandatory. There has to be a 24-hour buffer in between guests in properties to allow for that full cleaning to take place. In addition to which, they're now giving like cleaning regulations on what you can do. They're going to make an option available on Airbnb's website that you can pick properties where no one has been there for 72 hours as a choice. So that's going to slice into people's Airbnb money and revenue dramatically. So if you're in the short-term play, that's a whole different ballgame. So that brings me to my favorite rental state in the country, and that state is, drumroll please, Texas. Now, here's a story that just came out just a short time ago, and this was in CNBC, the top 10 most recession-resistant cities in the country. Take a look at this. How many of these are Texas? Almost every one of these on the list is Texas. And then you've got North Carolina. And I also like North Carolina quite a bit. Frisco, Texas, Plano, Texas, Denton, Texas, Austin, Texas, Lubbock, Texas. So tonight I specifically want to talk about the city of Lubbock, Texas. And let's just talk about some of the data that's recently come out about this area and how business friendly it is. So I was just there a few weeks ago, and I'm going to show you some videos of our properties here in a second. But I want to go through why Texas, particularly at a state level, is so attractive, and then just show you, because we're not just in Lubbock, we're in some other areas as well. But Texas in general is such an amazing state. And I was a fan of Texas even before I started investing in Texas because of how landlord friendly it is. So let's just start there. The laws in favor of property owners and not tenants. It's a non-judicial state, which means that you as a landlord have the ultimate authority. And there is not a judge or sheriff that wouldn't abide that. They absolutely stand by the fact that Texas is a landlord-friendly state. It's the fastest state in the country in which if you have to get an eviction for a non-paying tenant who violates their lease, and I'm not talking pandemic-related stuff at the moment, okay? That's not what I'm talking about. I'm talking about people who are like the professional tenants who know how to game the system, who think that they're going to squat in a property and they had no intention of paying rent. Texas does not tolerate that. And you can very quickly get a tenant out of there and get a new qualified tenant into that property. Very, very powerful. Texas also will not be like those other states across the country, some of the blue states across the country, which frankly are very tenant-friendly states. And there's nothing wrong with being tenant-friendly. But when a state is then also hostile to landlords, that's when I have a problem. And you're seeing states now that are allowing basically tenants to live in properties for free. And you can't do anything about it if you're a landlord. We're seeing California particularly, and crazy laws in San Jose popping up, making it illegal for you to do criminal background checks on tenants. And the idea is that if you were once incarcerated, you should have a place to live. I get that. But it would make it illegal for me as a landlord to see if someone was a violent criminal. And yet the liability falls to me as the landlord that if that person does something, let's say under this law in California, I rent to a violent criminal because it was illegal in California for me to do a background check on that tenant. And then that tenant does something horrible. Guess where the liability falls? To me, as the landlord. You mean that violent criminal did something in one of my properties? Guess who gets sued? Me. And that's a catch-22 right now. And legislature hasn't figured out what to do about it. But this is a reason why, as Garrett Sutton, our great legal friend, our lawyer friend, likes to say, please, if you've got properties in Oakland or you're thinking about investing in California, you better run. Huge mistake to be investing in that state. So again, Texas, incredibly landlord friendly. The laws are in favor of property owners. Everyone is paying their rents right now. Through the COVID crisis, we're not seeing evictions needing to take place. We have over 1,000 doors in that market, and we have not had one eviction that we've had to deal with. We're working with property managers, making sure that if anyone needs a concession on rent, we're working on that. But overall, we've had no evictions in over 1,000 properties. That is fantastic. The population. Let's get back to the population data, which is incredibly important. So when we look at Lubbock, Texas, particularly one of my favorite markets, the current population, 300,000. That's expected to balloon over 500,000 by the year 2025. That's what the projections are. Now, the past projections on Lubbock have been spot on, and they were actually lower than the forecast was actually lower than what happened. So there's an incredible demand for property and rental properties in these areas because of the growth and the population growth. The job growth is next. The healthcare expansion in this area is fantastic. So people think that these areas are just oil towns. They're not. Really, the name of the game is healthcare. And it's also Fortune 500 companies moving there. Apple building new headquarters in Austin, Texas. All of these big companies moving there. Why? Because it's so favorable for taxes. It's so favorable for business. Now, I remember when I used to host Fox and Friends on the Fox News channel, we did a segment where we would bring this giant TV screen out, and we had a guest who was an expert on population and migration patterns. He wrote books on it, and he followed all of these patterns, and it was so fascinating. I loved this segment. And we would do it every few weeks. But what he would show is all of these migration patterns from New Jersey, New York, going down to North Carolina, Florida, Texas. California, everyone leaving California, going to Idaho, down to Arizona and into Texas. Texas became like became the focus as all of these companies started moving and migrating to Tennessee, Texas, and those areas because of favorable tax advantages and no state income tax. Yes, you're paying higher for property taxes in some areas, but with no state income tax, you have an incredibly favorable business spot in this country. And no wonder so many companies are getting out. You have auto manufacturers and Apple and other companies moving there in droves. Texas Tech. So let's talk about Texas Tech. And Texas Tech University, which ranks 9th nationally in workforce preparation of graduates. So Texas Tech has been getting rave reviews, and the expansion of Texas Tech in Lubbock is phenomenal right now. And so a lot of people wondering, well, what's going to happen with Texas Tech in the fall now that we have this, coronavirus issue? What's going to happen here? Well, good news. So here's the latest. This just came out today from Texas Tech. Here's the latest news that today want to inform you right here that we intend to safely resume in-person teaching, learning, and residential life for the fall 2020 semester using a phased return approach. The decision is predicated on the fact that COVID-19 cases in the city of Lubbock continue to decline, and health officials advise us it is possible to implement a safe return to campus process in a manner that protects the health and safety of our students, faculty, and staff. So let's talk a little bit more about Texas Tech, because admissions have gone up by over 1,200 students for the 2020 to 2021 school year, bringing it to over 40,000 total student population. And we were there going through our properties just a few weeks ago. I mean, Starbucks is just filled with students. I went in to try to get a Starbucks for one of our breaks. We were going through a bunch of our new construction properties, and I said, I'm just going to run in and grab a Starbucks. It took like 15 minutes because there's so many students in there studying from Texas Tech. So an incredibly booming university, and of course, thanks to them making it to the Final Four, also helped their popularity tremendously. And it also helps that Patrick Mahomes won the Super Bowl as well. So you have a lot of favorability in that area, and the demand for properties is just off the charts. You have new elementary, and you have new middle school and high schools also being built all across Lubbock, Texas. So a lot of our tenants are healthcare workers, school employees, university employees, and that's why we have had a no collections issue and over 1,000 doors with no evictions right now. So that's why, let me go back to this again, CNBC and smartasset.com named it one of the most recession-resistant cities in America, Lubbock, Texas, number 7 on that list for all of these reasons. And look where it's located, number 7. If you can see it kind of close to the Panhandle in West Texas and some of the areas that we're starting to build houses, it's because it's not in those crazy California coastal areas that are given to like bubble shifts and crazy blue state laws. It's in kind of boring, nice appreciation West Texas, where there's not a lot of drama. And those are the places, my friends, that I love to invest. So now I want to show you guys want to see some behind the scenes of, we're going to start with our single family properties. I want to give you an overview of like what we build and what it looks like. These are now affordable single families. So in these particular properties, we didn't do granite countertops and those things. These are slightly lower and apply to the student housing population. And we've had tenants in these properties for many, many years. So take a look right now at some of our single family properties in Lubbock, Texas. All right, here are some of our single family affordable homes. These, we're building another 30 of these right now. Again, the demand for these is off the charts because when people move into these, they tend to stay for many, many years. So in established neighborhoods where we can pick up lots next to established properties and then build these new construction single families from the ground up. Let's take a look. Here's the kitchen in the single family, so it's pretty darn big. Plus you got the washer dryer hookup right in here. Again, the laminate hardwood floor gives that real nice look to it. Incredibly durable. With their own backyard. The landscaping on this one is not done just yet. All right, here's another whole subdivision that we're building. This is 31 units in this particular part of West Texas. Slabs are built over here, so about 90 days from when the slab is poured to being completed for a tenant. So these are about 60 days away from being completed. Now if you take a look across the street, this entire area over here is also going to be built up. So let's go inside and see where we are in the construction. It is super muddy today. I should have worn my work boots, but I didn't. Let's take a look inside here and see some of the progress. Hey birdie. They don't look pretty at this stage. It's always amazing to me to see a project like this, to think, oh my gosh, in 60 days, this is gonna look just like the other ones. Amazing, amazing job. I love West Texas. I love these areas because the single family need in this country is through the roof. And if you're going to be in areas where there's incredible demand, why not go for the areas that there's like double the demand for affordable housing right now, where the job growth is just continuing to explode. The student population is continuing to explode. The businesses that are coming there that need housing And this is why this area is so attractive to us and why we're building so many homes there right now. The same is true of what Warren Buffett said recently. Warren Buffett said, if I could buy every single family home in this country, I would. And that's why I think last year he bought over $100 billion of real estate, because of that stable long-term asset. The problem is that there's just not enough of them. And a lot of hedge funds now are doing basically what we're doing. They can't find these older homes to renovate, picking them up here and there like little daisies in a field because they're so hard to find. A lot of like the local flippers kind of get their hands on those. And for affordable houses, they're just not there. So what's the smart move? Build brand new construction where you're not having to deal with fixes and problems and all these little things that pop up. I know, I've done plenty of those in my time, and it's so much nicer to have that new construction feel. So again, I apologize for some of that choppiness in the video. I do want to show you now our duplexes, and this is really exciting. So these are some of our new construction duplexes in West Texas, and you get to see, and some of the affordable housing in the student sector as well, but you get to see a little bit of this difference because we're building in all over that area, and you get to see some of the differences. So I want to play this now, get a chance to see some of our duplexes. Let's talk about affordable housing. So we have an incredible demand for affordable housing right now in this country. Over 25 million homes are needed. So these are a lot of the properties that we built over the past few years. We're building another 40 of them right now. So these are affordable homes, which means you could come in and put about $40,000, $45,000 down. And the price point is going to be anywhere from $100,000 to $120,000. With about $1,000 in cash flow rent from one of these single families or duplexes on either side. We're probably going to be able to raise the rent here in the next few months to about $1,100 a month because the demand. We have a waiting list right now for tenants for these properties. And many of the properties here that we built about 3 years ago, the tenants they're still in these properties, because when a tenant moves in to a brand new house in a good neighborhood with a lot of space, 3 bedrooms, brand new everything, they tend to stay. So again, the tenants in these properties have almost all the original tenants that we built 3 years ago. And so this entire subdivision built from the ground up. And again, we have over 40 of them that we're building right now. So this whole project here is side-by-side duplexes built from the ground up just a few short years ago. And these mostly really appealing to student housing sector because 3 bedrooms and 3 bathrooms. So each bedroom has its own bathroom, great for the student housing here for Texas Tech University and the other universities here. So let's go inside and show you what these affordable homes look like. So this property, it's 3 bedrooms, but 3 baths. So this is perfect for student housing. Really appealing for the student housing. You got, you're not going to have like the granite countertops in here, but you got the really durable tile floor, and students love this floor plan. Really easy to work with by having an individual bathroom in each of the bedrooms is hugely beneficial to student housing, let me tell you. So here we are in one of the bedrooms, and here's one of the bathrooms. I wish when I was a student I had my own bathroom at the University of Pittsburgh and a walk-in closet. So this one is ready for the new tenants. All new carpeting just put down. Took off our shoes because we were walking through some mud today. So I do not want to have to deal with steam cleaning the carpets again. All right, today we're going to talk about the power of a self-directed IRA, and one of the fantastic members of our team who, if you've probably talked to her on the phone, you know what an expert she is in the self-directed realm. It's Haley. Good to see you. So we are in one of our new construction duplexes right now. This is a 3 bedroom, 3 bath, put in some quartz countertops. The team did such an amazing job on this. But let's talk about the power of a self-directed account. People watching right now maybe just stumbled across this video for the first time. They don't know what a self-directed IRA is. We're in a brand new construction duplex that is just about to be finished. New appliances going in, brand new cabinets, everything is brand new here. A tenant is about to move in. Talk to me about what a self-directed IRA allows you to invest in. It's totally separate than what we've been told about, investing over the years, the stock market 401k.
Yeah, you're absolutely right. So a self-directed IRA, in a technical sense, it's not much different than any other retirement account from a taxation standpoint. But what it really does is it does allow you to invest into alternative asset classes. So it's just really taking the handcuffs off of your investment options. You can invest in things like oil and gas, gold and silver, or properties just like this inside of that self-directed IRA.
Now let's talk more about the power of a new construction property inside of that self-directed IRA. Why is this even more attractive than maybe just a renovated project?
So with the newer construction homes inside of a self-directed IRA, it's going to do a couple things for you. It is going to help to keep you in compliance with some of those IRS rules and regulations in reference to prohibited transactions. It's also going to be completely finished. So you're not talking about a property you need to go in and you need to have hands-on or do renovations, which is prohibited inside of that self-directed IRA. So that's one of the huge benefits to newer construction.
Another great benefit is working with our team and our fantastic team like Haley and our entire property management team and everything else that we have as a full service company, because you're investing in this property inside of your retirement vehicle. You're not managing it. What if light bulbs need to be fixed, mechanicals need to be updated? That's the benefit of having a full service team, right?
You're absolutely correct. And when you're talking about this type of quality, this type of property, it's going to mitigate that risk as well for you, because there's not a whole lot of fixes and things like that that's going to happen on a newer construction home. So it's great for longevity inside of that retirement account as well.
Absolutely. And today we even went to one of our properties that was built 5 years ago. It was a 5-year-old duplex. We're doing a tenant turnover on that property right now, and it looks brand new. I mean, it looks like it was just built. So the durability, the longevity of a new construction, it's something you're not going to get with a 60-year-old house that you're doing a renovation on.
Absolutely. And I mean, you can talk about the quality of the tenants that you're going to be able to attract with a property of this quality.
Right. Quality tenants are going to stay a lot longer, and they're going to want to, if you get certainly the larger properties that we're doing too, 3-bedroom, 3-bath. Right. They nest. They want to stay longer because they have more space, right? And they're in a good school district. They're not going to want to, it's not as transient as some of the larger multifamily properties also.
That's absolutely correct.
So there you go, some insight from Haley on our team. I'm sure if you've booked a call with our team, you've spoken to Haley, who's an expert on self-direction and setting up those self-directed accounts. By the way, if someone does book a call with us, there's a link below. How quickly are you able to help them set up their self-directed account? Pretty quick, right?
Absolutely. Yeah, the self-directed process over the years, companies have definitely made it a lot easier, more accessible. With our team, what's great is I'm right there on the front lines to help. So any questions that you have, happy to jump on a phone call. We can set up an account in probably 8 to 10 minutes over the phone.
Right. That's right. I say 10 minutes. People are like, really? Is that possible? Yes, it is that possible. So there you go. There's the power of self-directing IRAs with new construction properties. Thanks, Haley. Appreciate it.
Yeah, thanks for having me.
And we'll see you next time, everyone. So there you go. That's a look behind the scenes in our new construction duplexes. And, it's really exciting to be able to see those get built. And, of course, you can see all the amenities in there, too, when we're looking at granite countertops. We're looking at stainless steel appliances, great flooring, vaulted ceilings. And it's great to see the ones that we built like 5 years ago, and we go and we see the same tenants that moved in 5 years ago are still in the property. So, again, it comes back to tenant turnover. So, we have a price range at Morris Invest. If anyone's interested, please book a call with us. But like the minimum down payment on one of our properties is in that $40,000 to $45,000 range in for a down payment. And then of course we have financing built into everything. So if you've got a self-directed IRA, if you've got a regular IRA, if you've got a 401k, under the Affordable Care Act, under the CARES Act, right now, you can tap into your 401k up to $100,000. So I just interviewed a great couple today on the show, Deanna and Jason out of Florida. They have now 6 rental properties, and Jason told me today, he said, as soon as I talked to my team at Wealthability, I ran. He said, oh, my bank said not to do it. He said, but the great CPAs at Wealthability were like, you better run and do this right now under the CARES Act. You can take out up to $100,000 of your retirement account right now without a penalty, and you can invest that money. And then, of course, if you still have that job, you can pay it back through your payroll. But it used to be $50,000. And then, of course, you'd have to pay it back, and there'd be penalties and things like that if you were late on it. Now, you can actually withdraw the whole thing and show hardship. If you can prove hardship for any number of reasons, you can pull that out, or you can still take the loan out yourself up to $100,000. So there's 2 ways that you can do it, and you can take advantage of that right now. Remember, every member of Congress, president, real estate investors. So these laws favor real estate investors. So take advantage of them right now. But you could get a down payment on a duplex, a single family property that's cash flowing from day one. I saw someone in the chat say, how come there's no people in there? Well, these just finished construction and now they are rented. So we don't like to barge in on tenants. We don't like to do that. So the properties that we were just seeing in these videos were just completed construction, and there's no tenants in the property yet. Now those tenants have moved in and they are cash flowing. So with our company, we will not sell a property until it's completed, cash flowing with a tenant in place. That's before you get to touch it. So you're not allowed to touch it until that process. We have some clients that ask us, can I buy it before the tenant moves in? And we really try not to do that. It's only when the tenant moves in, it's cash flowing, that you can then buy that property. So if anyone's interested in booking a call with our team, you can absolutely do that. You can just go to morrisinvest.com. It's a free call, 30 minutes. We'll get on the phone with you and figure out what your situation looks like. And it's a customized approach. It's one-on-one. We do not try to do things like, there's not a one-size-fits-all approach, okay? It's one-on-one. But Texas, again, one of the best states in the country to invest in real estate for all of the reasons that I've laid out here today. I saw some people asking about like Indiana and some of those other areas. Look, I still have properties in Indiana. I'm not expanding there right now because crime continues to go up. And if you don't believe me, here's the latest crime numbers out of, let me pull this up here. Indianapolis, Indiana right now is ranked the 12th most violent city in the country, and in 2017, 156 murders, and so you have to be careful with some of these areas where you can be attracted to like really low prices. I would certainly recommend, if you're in some of these Midwest areas like in Indianapolis, make sure you're in some of those B-class areas that are outside of the violent areas. So the pockets where I've invested before are those sort of transition neighborhoods, which can be good, but just please be careful and just make sure that the data we talked about today is applicable. Again, watch my interview with Neil Bawa. He's a genius, okay? Watch my most recent interview with him where we talked about this crisis right now and where he is bullish on investing just like I am, and Texas was at the top of his list for the reasons that I laid out today. Now, he's a multifamily investor. He's pulling back and starting to do and invest in duplexes and those smaller residential 3, 4, and single family units. And so we were talking after our show about the duplexes because those are such a powerful investment for him right now. And so look at that data, pay attention to the numbers, and if you're just a casual investor that doesn't pay attention to this stuff like we do, this is why you watch our show, folks, I hope. Because we're knee deep in this stuff on a regular basis. We are not going to be building 400 homes in an area where there's going to be a problem. We just wouldn't do that. So we wouldn't be servicing our clients in that way. And so I hope that even if you don't invest in Texas, you pay attention to these data points. Tennessee or other areas where you're seeing growth. Again, I talked about Michigan. I invested in Michigan in the past. I still have properties there. But some of the data there scares me. Some of the data on crime scares me. Some of the data on job loss scares me. And so would I want to buy more properties there right now? No. Turn it around and I'd be happy to go back. There's also some other blue state related regulation tape that's been popping up in Michigan that I'm not a big fan of lately. California the same way, New Jersey the same way. More regulation, more red tape means not landlord friendly. Again, Texas, the top of that list for being landlord friendly. So smash that like button if I brought you any value today. I appreciate it. Please subscribe if you're not already a subscriber. And we try to do these videos on a regular basis to bring you as much value as possible. Again, we'll have a link below so you can book a call with our team if you're interested in that. If not, soak up all the videos and learn as much as you can, folks. Much love.